Hey guys, it's Boris. Welcome to our review of the weekly technicals. We'll start with the majors this week. We'll take a look at the euro dollar, dollar yen, and pound dollar in this particular segment. And it's been, of course, another insane week in the currency market. It's actually not been a sane week. It's really been another high week of volatility. Starting with the euro, I think what's interesting here is that if you're looking at this from a longer term point of view, clearly a very strong fail at a lower high here, right above the 1400 level. We've been watching this level very carefully. We said that the 1400 was going to be a big resist level, and in order for it to really reestablish its or confirm its breakout, we really need to see 1450 on a closing basis. Did not get that. Got the actual reverse of this. The euro failed pretty miserably here, but now coming into this very decent support here at 1250. And of course, next week, all of this could change based upon what the FOMC says. It's really the FOMC meeting that let me just move the display date out of here. The FOMC meeting that really will be the key driver of volatility in the euro dollar and the dollar yen next week. Because of course, if the critical thing here will be whether the Fed signals to the market that they are still open to the possibility of a July hike. Nobody, of course, expects a June hike at all. Or whether they will really very clearly spell out the prospect of delaying everything all the way out to possibly December. At this point, the market really does not expect any kind of a rate hike out of the U.S. So if you get any type of hawkish rhetoric out of the Fed, this could drive the euro right straight down, at very least, into the 1100 support over here, and really, frankly, into the much more interesting and a much more key psychological level of 110. To move for 110 is, I think, would take a tremendously hawkish statement, and I think that would be really a big stretch for the euro to move that much in the week. But bottom line is, euro has certainly failed at a lower high, and right now, barring a very dovish statement that would turn everything around, you have to sell the rallies. You basically have to assume that unless and until the euro breaks and closes 1450, which would reverse all of this negative price action, then this negative price action would simply be just a retrace in what potentially could be a big uptrend. Everything in the euro now is a sell the rally type of trade. There is, of course, the key point when you're looking at the chart here is that this is going to be the very key, very big level on any type of dollar weakness. If the dollar weakness is pronounced enough that it can clear and close above 1450, then you really have to get bullish the euro, and every retrace becomes a buy, every dip becomes a buy. For now, the fact that we have a lower high, that we failed, it's sort of telling you that the technicals are showing the euro rolling over. And euro, in fact, I think is going to be a relatively weak trade, perhaps on a couple of crosses, which we'll take a look at later. So the euro, to me right now, very much the key resist point is 1450. The key support point right now on the near-term basis for this week is really going to be the 1150 level. That's very clear on the charts here, and that's pretty much where I think any type of dollar strength probably is going to end its onslaught. If we really take out the lows here, that would suggest a much stronger possible dollar move of really full unwind of the euro and a move right back down below the 110 level. A lot of that we'll have to see how it plays out given the news on Wednesday. That's going to be, I think, a very determinative price action from which we can trade going forward. We also have U.S. retail sales. We have just a smattering of other small data pieces, but really it's going to be the FOMC that's going to be the key pivot for both the euro and the yen. Now the yen is very interesting from a different point of view. We talked about the fact last week that the yen really needed to hold this 106 level. This is absolutely critical that it actually holds the 106, because then we have the reverse technical formation. We have a higher low, which generally is an extraordinarily decent long formation, meaning that the longs came in here, held the support above the previous low, building up for perhaps another move higher. Again, this is really going to be a function of the FOMC message, but also in some ways, I think, a function of risk aversion and risk flows. One of the key things that we're going to talk about next is the pound, and the fear that I think is starting to sweep throughout the financial markets of a potential real possibility of Brexit, which is not only going to be, I think, very volatile, of course, for the pound, but maybe for all financial assets. And of course, when something happens to the financial assets that's very volatile, it's the yen that gets stronger. So this is a kind of a hold your breath trade. You can definitely get long here in front of the 106s, but you absolutely have to get out at 105.50, because if that low is broken, that is going to be a very, very broken trade, and could really push dollar yen all the way to parity much faster than you think. So the risk reward here is pretty good because you're very, very close to the lows, but it's by far from being a high probability trade. It's certainly very vulnerable. We really did not get a lot of upside momentum here on the recovery from dollar yen. So it's just take a punt, have a bunch on the long side, but be very, very weary of the fact that the 105.50 is the absolute stop out point on this particular move, because it essentially would confirm what is in a much longer chart sense a very clear definitive downtrend. I mean, the thing that we all want to buy the bottom, including me. I'd love to buy the bottom here. I'd love to be able to call a dollar bottom, and I certainly fundamentally feel that that the dollar should be stronger than it is. But when you're looking at the technicals, the chart is unambiguously telling you that this is a continuous downtrend with a series of lower highs. The only thing that's sort of salvaging the long position on the chart right now is the fact that we've been able to stop in front of the 106s, and the only salvation that the bulls have here is if the 106 can hold. So on the upside, it's a small risk. On the downside, you're still basically trying to buy a bottom in what is essentially a longer-term downtrend trade. And maybe the much more intelligent thing is to fade whatever move happens here. The upside, the resistance points over here, clearly the 110 I think now looks pretty definitively strong resistance on the charts. And even if we get some positive news, it's going to take quite a lot for us to move through here. On the other hand, everything can happen. That's why I always have an open mind. I never try to be definitive about anything because you have to have an open mind in the marketplace. If we have surprisingly hawkish statement from the Fed that literally takes dollar yen through 110 and we close above 110 on a closing basis, that would be such a positive bullish impulse from a technical point of view, because it would really basically rebalance the whole price action into effectively a very strong bottom with a higher bottom over here. That at that point you can get much more convincingly bullish. But now it's just a real strong hunch to get bullish at this level, and very, very wary of making sure that you get out if we break the 105.50s on a closing basis. Now, last and definitely not least, but certainly the absolutely least predictable, and the reason why this is absolutely least predictable is because honestly, technicals literally do not matter in this particular chart, except in the most extreme cases. We are now trading purely on absolute unknown political factor of whether Brexit happens or not for the next 2 weeks. The hysteria is getting louder and louder. I'm getting calls all the time from all the media places, essentially seriously starting to worry about the fact that Brexit could become a possibility. As I've said, this is really an asymmetrical trade, meaning that if Brexit fails, if the stay vote wins, the upside here is relatively limited. We have a smattering of UK data, none of which I think is going to matter for more than 50 pips on a 1 hour basis, because once the market is still going to be very much focused on ultimately whether the Brexit vote has a real chance of winning or not. So the upside on Brexit, if the Remain vote wins, very limited, because we already have a very significant amount of resistance here at 47. The data out of UK is not exactly great. The relief rally may overshoot and take us to probably 49 max. But then when we look at the charts on a longer term basis, this 49.50 I think is going to just bring in a ton of sellers and bring it right back down, because frankly there is, it's just a relief rally. There is not a fundamentally strong trade to the UK on the UK side. The negative trade, the leave trade, of course, just opens a Pandora box of unknown uncertainties. And whenever you have an uncertainty in the market, the move to the downside could be vicious here. And the move to the downside initially, the chart point is 39.38. That's the near swing low that, of course, we set in March in a peak of Brexit panic. But ultimately, it can go much lower. And in fact, if we want to take a look at the, let me just delete this. Let's just take a look at much longer charts. Let's go to the monthlies for like about maybe even 5 years, I think. Yeah. Yeah, we don't even have, we really don't even have any reference points until we probably have to go. Let's go to monthlies to 10 years here. Let me bring the chart down. Yes, so on the monthlies on the 10 years, the reference point is the 35s, which makes perfect sense. If we really collapse, people are anticipating about a 7 to 8% down, downward move. We still have another week beyond this one. We'll talk about Brexit, but ultimately, sort of the wider resistance points for the resistance points for this week is 47 to the upside, 38 to the downside. That's how wide they have to be just for this week alone. And then on a longer term basis, if you're sort of trading Brexit, 35 could very well be the downward point on any kind of a negative UK news, meaning that UK decides to vote for Brexit. So essentially, when we're looking, let's just sort of summarize our positions here. On the euro, the upside on resistance here is, let me just get into my typing mode here. The resistance here for this week is really sort of the 114.50. That's the absolute key point. Let me just move this out of the way so you guys don't get distracted. That's the absolute sort of upside point where I think euro is going to meet tremendous amount of resistance. The near-term support here, 111.50, with potentially if sort of a very hawkish statement, maybe taking us through the 111 level. That's really going to be the level that I'm going to be watching for. I think 110 is going to be a very big stretch here. So 111 is pretty much the key point. The yen upside, the most immediate upside is 108. Of course, you have potential here of a uber bullish dollar move taking us all the way through 110, and that's, if we take out that level, that could be a very key level. So I would watch the 110 very much. And to the downside, support now really needs to hold the sort of the bare bones minimum support here is 105.50, and ideally you want it to stay above 106 if you want to make a bullish case for this trade. If we break the 105.50, it's lights off for the yen, and I think you don't want to get involved. And for the pound, it's really just sort of a question mark. But if you were trading it wide, it's 147 to the upside. That's the resistance in most immediate cases. 138, I guess you could say 140 on the most immediate cases, so to 138 as the support zone. But ultimately, if you're sort of positioning for Brexit, you need to be prepared for a 135 test at least, because that's the multi-year low that could very easily be tested in any kind of a stress environment. So that's how the majors shape up this week. Lots and lots of interesting possibilities. Going to be watching, of course, everything, but most importantly, it's all about Wednesday this week. It's all about FOMC, and we're going to be watching these very key levels to determine where things are going to go in the near future.